So good afternoon, everyone. Thanks for joining. My name is Raresh Pamphil. I'm the project lead for Agora. We're here for a webinar with some exciting guests today. Before I introduce them, I'll just tell you a little bit about the project. So Impact Agora, as you might know, is a new industry initiative. It's sponsored by Barclays. It's powered by Delio. And it is an institutional marketplace for impact investing. And what that means is that we allow organizations like venture funds, accelerators, wealth managers, family offices, and advisors to join and to share deals and browse deals shared by other members. We currently have 32 institutions that have joined. We launched in April. You can find the replay of that event on our website. And that's a total of 260 million of opportunities that you can browse. If you want to learn more about that and see a list of our current partners, you can look at the website, which is impactagora.com, and we'll touch a bit on that at the end. But now let me turn to why we're here today, which is to hear from some very exciting organizations who are involved with the initiative, and those are Nesta, Big Society Capital, Zero Carbon Capital, and Bethnal Green Ventures. So they're all they have all been picked because they've had notable activity in the last few months, whether in terms of closing investments, securing investments, or other initiatives in terms of allocating capital. So they're really well placed to tell you about what's going on in the market and perhaps what we can learn from the successes. That's kind of our focus for today. I'll start by introducing Lisa, but before that, just on the Q&A, I wanted to say it's open throughout the presentation. However, we'll be taking questions at the end, so you're welcome to raise your questions at any point. But and I will, after about 30 minutes, I will start asking the panelists to pick them up. So yeah, feel free to use the Q&A box. We won't be responding to the questions there. We'll be responding to them live later. So I'll turn over to Lisa first. Lisa is an investment director at Nesta. Nesta has a very well-known impact investment practice here in the UK, which she can tell you more about. And Nesta recently joined Impact Agora, both to browse for opportunities, but also to share some of their recent investments to find potential co-investors. And so within the next days or a week or so, you'll see the first deal go live from Nesta. But in the meantime, Lisa will speak more about their recent work. So Lisa, I'll turn it over to you. And the first question for you is just give us a bit of background on Nesta Impact Investments and your investment strategy.
Sure. Well, thanks, Raresh, very much for the intro and the opportunity to take part in the Impact Agora webinar and to be a member of the platform. So for those of you who aren't familiar with Nesta Impact Investments, Nesta is the UK's innovation foundation. We do research and policy work, we run grant programs, but we also have been investing in ventures and impact for the last 20 years. We're currently investing seed to Series A across health, education, and government innovation, which are the thematic themes more broadly across the organisation as a whole. And we're looking to invest in businesses where impact is integral to the commercial plan, and we track progress on both. So we have been quite busy over the last couple of months. We completed 3 deals in March and April. These are companies that we've known for a while, but we managed to complete the investments during lockdown. The first is a health tech investment in a company called QDoctor, which is really exciting and has just spiked in activity due to the COVID situation was it offers telemedicine, video consultation for GPs, urgent care and hospitals. As I said, it's a business we've been talking to and working with for a number of months. So it was opportune that this product is kind of being so helpful in responding to the current circumstances. And we've seen growth accelerate massively with the platform now available to 25 million patients. It was a £1.5 million deal we led alongside Angels and the crowd funding platform Cedars. The second deal is a company called Bibliu, which is in the edtech sector, offering a digital platform for academic textbooks and course materials for universities. It was a £7.5 million Series A round that we led alongside Guinness Asset Management, Stonehage Fleming, who represent a variety of family offices. And there were a number of angels who came in on the round as well. Bibliu tackles the problem of affordability of textbooks for students at university, where many students don't have access to the textbooks they need to complete their courses. And Bibliu offers equal access on a digital platform to all students. Equally, in the circumstances that we find ourselves, universities have had to shift very quickly to remote learning, and therefore digital solutions like Bibliu have been taken up in droves. I think the take-up has tripled or quadrupled in recent months. The third deal is another EdTech deal, but with a target customer base in primary schools, a company called Empiribox. It was a £2 million deal where we co-led alongside Downing. And Empiribox typically provides science experiment kits for primary schools, so physical science experiment kits. This is to help schools address the gap in STEM skills by making science practical and engaging for young children. Empiribox has pivoted quite adeptly given the homeschooling and remote learning circumstances by using their teacher training videos to adapt to a kind of homeschooling product. So they've used their current content and assets to quickly adapt and offer a product that is relevant while everyone's at home. So all of these recent investments are in growth phase. They have subscription models or multi-year contracts, and they've all shown how they can be relevant in the current circumstances where remote working, remote learning is necessary, but they also have a strong business plan beyond the lockdown situation.
Yeah. So is that coincidence that they happen to be prepared to deliver a scalable, tech-enabled business model, in other words, you were already looking at them before the pandemic hit. So is that your investment thesis and your focus, or was it just coincidence that you happened to be ready to close these businesses?
I think there's probably a bit of both, but the shift to digital solutions has been, we've seen that shift. I think this current circumstance has accelerated it massively and forced behavior change. And I think we've also seen agility in some of the management teams in terms of, when you've got a physical product, but you have got online content and assets that you can quickly adapt. There's been that kind of agility in adapting to the current circumstances.
Yeah, that makes sense. So looking more broadly at the market, it's good that you and Downing, Guinness, and others have been able to deploy money? Where are people struggling, and what advice do you have for people that are thinking about a fundraise or trying to go through it during this period?
So I think we've seen continued activity in the market on the part of investors. In the end of the market that we operate in, I'd say that it's much harder for the kind of earlier than mature seed stage. It's much harder. I think investors are looking for some proof points, and also for business models that can work within a lockdown situation, but also that have the potential beyond that. So we want the best of all worlds, but I absolutely see continued activity from angels, from family offices, from institutional investors in our end of the market. I don't know if maybe both the tech and the impact angle on our investment strategy is helpful, given that there is this kind of necessary shift to digital solutions, and the fact that often impact businesses are operating in markets that are kind of counter-cyclical to the economy, particularly where you're doing business with government agencies or public sector agencies. In terms of advice for entrepreneurs, I would say if you plan your fundraising to take a lot longer than you would typically plan, it is taking longer to pull investment rounds together. Leverage your networks. I think Impact Agora is a great network to use, but leverage your networks as far as possible in terms of investors to approach. Revisit past conversations with investors, and plan a cash runway for 18-24 months, and really kind of look at minimizing or kind of optimizing your cash burn.
Thanks for those tips. So let's move on to Jeremy from Big Society Capital. So Big Society Capital, as many of you know, is a wholesale UK investor. They've invested in many different funds here in the UK, and are also active on Agora as an investor, browsing through the GPLP funds that are currently capital raising there. In terms of your experience during this period, Jeremy, I guess let's start with your response to the COVID crisis, which I know there's a page on your website about, and then there's a lot that we can talk about, including yesterday's announcement with new dormant bank account money. But yeah, give us an overview of BSC's work in the recent period.
Thanks, Raresh, and great to get a chance to speak to everyone. Thank you for taking the time as well. So I guess as many of you know, and it says on our bio there, we invest mostly through impact funds, but we also actually invest through arrangers, social banks, crowdfunding platforms, because we have this broader mandate to develop the impact investment market. And I guess in that context, we really welcome the arrival of Impact Agora. It's a really important step forward. So I'm sure there are many people on this call who helped make it happen. So thank you to all of you. I think it's really important. So in terms of what we've been doing with our market support, I guess given this wholesale role we have, it's worth saying that anything we do is a collective endeavor with the fund managers we invest through, with the organizations they support. I think one positive thing that has come out of this crisis is how everyone has come together, and how quickly actually everyone's come together to innovate, to adapt to what's needed. I really hope we take that forward to the challenges ahead. As an organization, we set out 3 priorities in terms of what we were hoping to achieve, at least in the emergency phase, which we're probably roughly getting to the end of. And they were around sharing information, adapting our existing funding, and setting up new funds. Let me quickly talk about each of those. So on sharing information, Raresh mentioned there's all sorts of stuff on our website. We've set up a portal charities and social enterprises. I guess what's interesting is that content now has had over 60,000 unique users in the last couple of months. So that's roughly 10 times what we would normally get, and I guess that tells us just how important information is to all of us in terms of navigating this crisis. In terms of adapting our existing funding, as a wholesaler, we felt we needed to move pretty quickly to give fund managers clarity in terms of what they could do. An important part of that was actually allowing everyone to make capital and interest holidays to organizations. That's really the quickest way of getting cash to people in an emergency is immediate cash flow relief. To give you some sense, we've had 500 organizations who've now taken us up on that. That looks like a big portion of our portfolio, but it's actually less than 10% by value, and that's really just, I guess, showing us how smaller organizations have been much more impacted. And then in terms of new funds, we announced 6 weeks ago, 100 million emergency response and recovery set of investments. Yeah, maybe we can go into some of those a little bit later if that's useful. The other thing that we spent quite a lot of our time doing is working with the government to ensure that their responses really work for the enterprises in our portfolio, whether that's around how that furloughing staff, different grant programs, whatever else it is.
Good. So it seems like the majority of your portfolio is quite resilient. What's driving that?
So I think Lisa touched on this in terms of public sector revenue streams. So perhaps unsurprisingly, the organizations that have been most affected are where they're reliant on footfall and when they're reliant on consumers in different ways. The portions of our portfolio that have been most resilient are affordable housing, community renewables, actually a lot of the venture portfolios in different ways, given the tech element of it. But actually, I think the most surprising part has been on the larger charities and social enterprises who are involved in public service delivery. Actually, they've been generally pretty resilient, similarly in terms of social outcomes contracts. And that's because so far, actually, the public sector has been pretty flexible, I think, around those contracts and how they work. How that will play out over the next year or so remains to be seen.
So in terms of the funds that you have in your portfolio and how they've deployed money, can you tell us anything about their activity or your activity in terms of new funds being set aside, or maybe even touch on the government recent commitment? I think it's 150 million of new dormant assets. Yeah, so I guess in terms of our fund managers, to give you some sense, our fund managers have made almost 200 new investments over the last 2 months. Now that's heavily skewed towards the lending funds and emergency loans in different ways. Quite quickly, we set up one of our existing funds, the Community Investment Enterprise Fund, which lends in deprived areas to make small loans, emergency loans to organizations. Actually, the emergence of bounce back loans since that many people will be aware of have really helped there, because the sort of volume of demand we were getting was much greater than we could manage. We're starting to see more investments come through in equity, in property, in renewables, in other areas, but I think that will take a bit longer. You asked on the dormant accounts, so there was an announcement some people would have seen perhaps yesterday. It's worth noting that the money coming to us there is not new money. Those of you who've dealt with government before will know that they like to announce things a few times, which we're very glad to be getting that money, but it was committed many years ago. It was re-announced a month ago and has been announced again today. But there is some really important stuff that is in there, actually. And some of it is around financial inclusion for an organization called Fair for All, which is trying to really revolutionize how affordable credit is delivered in the UK. And that will become increasingly important through this crisis, actually, given the pressure people are under, the access to affordable credit. People will know that 3 or 4 million people in the UK use high cost credit at the moment. It's 10 million plus people who don't have more than £50 in savings. So as we go through the stresses of the next couple of years, actually that's going to be really important.
The other important new money that came out of that was to an organisation called Access, which is a sister organisation of ours that provides grants and blended capital alongside our investments. And that was really just reflective of the fact that to get through this crisis, we're going to need really a combination of grants and investment, but actually often grants being increasingly important. I think what's interesting is we're used to charities perhaps blending grants and investment, but actually when you look at it across the whole economy now, that is happening in terms of all the different government programs that are being put in place to all sorts of SMEs. So there were 30 million there that is for new programs to allow us to support a broader range of business models, which will be fantastic.
Good. So good to have that VCSE perspective as well. So the more of the social enterprise and the voluntary sector represented as well. Having started with Lisa, who's looked at the who invests through equity. Good to have the perspective from Big Sided Capital as well. And now let's turn to Pippa from Zero Carbon Capital. So Zero Carbon Capital is a new fund manager that also recently joined Impact Agora, and you can browse their investment memo there and learn about their investment thesis and their approach to impact. Pippa is one of the founders, and this is on the back of her earlier career as an angel investor. So I'd like to turn over to her and ask her just to start by telling us a bit about your investment approach and your pipeline.
Thanks, Ramesh, and thanks for inviting us to join you on the panel today. It's great to be among such fantastic, experienced company. So our investment thesis is explicitly around climate technologies, so scientific innovations that will help to accelerate the zero carbon transition, hence the name, by making it cheaper and better to use low or zero carbon alternatives to existing fossil incumbents. So, for example, something that would make a solar panel or a battery cheaper and better than it is today, or a new technology addressing an area where we don't yet have a viable solution. So, for example, decarbonizing heavy industry, or there's a lot in the carbon capture world that we haven't really managed to scale yet either. So we're looking for those new technologies and looking to support them very early stage. So we'd typically invest at pre-seed or seed stage, and it's an EIS fund. So we're mostly focused on the UK, and we're going to be investing over a year. And our plan is to really make it more attractive for entrepreneurs to be going into this space and to have these big ambitions, because that's what we're going to need. This pipeline of technologies over the next 30 years to get us to the zero carbon world.
Great. So in terms of that approach of decarbonization, what have you seen in terms of government response, policy, and regulation that is affecting that vertical and that theme, either positively or negatively?
Yeah, I think the government most governments have been pretty slow to get the necessary regulations and legislations and incentives in place that we need in this space. We are hoping that some of the pressure being placed upon the government as a result of the coronavirus recovery plans will actually help to accelerate some of the clean technologies that we're looking to support. The government is pumping billions into the economy, and it makes sense to make that capital work double time towards their net zero goals that they made last year as well. So we're hoping that will actually help to accelerate things. And we're seeing some promising signs of that. There's been some initial indicators from the government, but we're yet to see the detail that's going to really prop that up. Prior to that, again, the UK government has been compared to many other governments, I've been living in the US for the last 9 years, and they've been going backwards in so many areas that it's actually a relief to see a bit more of a coherent response here, and at least the intention being there. But there's a long way to go in terms of having the infrastructure in place that we need to support a zero carbon economy, having the subsidies in place to make these technologies more accessible to the mass market, and having that clear intention being set out at the high level of government.
So in terms of this green recovery from the crisis, which I've heard some people talk about, and your angel portfolio or your investments, are there any examples that you can give us to bring it to life in terms of where should the government be putting more money to work, or what should investors be focusing on as themes today?
Yeah, it's interesting. I think a lot of the climate investment in this space is quite dedicated money, and it's still putting itself to work. So if you look at the big climate funds on both sides of the Atlantic, there's still investment happening. You might have seen an announcement yesterday from Stripe, and that they're one of many tech giant companies who are putting millions of their own money into your carbon capture and utilization. So I think that's a really exciting space where there's going to be a lot of pretty smart money going into that kind of technology, as a kind of the corporates kind of up their game in terms of offsetting is no longer enough. It's got to be really addressing this in a proper zero way. So I think that's going to be really exciting to see more support for that and more legislation coming into place behind that. There's still one of the biggest gaps in the market in terms of what we need is having a proper price on carbon. At the moment, markets aren't able to an entrepreneur can't make money from a carbon capture company because there is no price on carbon. So that massively reduces incentives all the way down the line. And the same is true of all of the other negative externalities that come through companies operating from the environmental perspective. So that's something we'd love to see more progress towards. And that's our investment hypothesis, is that there'll be many megatrends acting on the economy, from government regulation to consumer pressure to stakeholders, shareholders, that will all line up to start enacting that actual price on the polluters.
Got it. So a quick question before we turn over to Cansu from BGV. In terms of your own fundraise, I know you recently reached a kind of 1 million mark. How's that been going, and what advice do you have for the audience in terms of managing a fundraise?
Yeah, thank you. That was a really exciting milestone for us. We're a seed stage fund, so our minimum, our fund minimum was 1 million. We're now aiming for a target of 2 million plus, and most of our fundraising has come from individuals, like high net worths. In terms of advice for others, the people where we found the best return on our efforts is really people that we have personal trust with. So unsurprisingly, people we've worked with, people we've invested alongside, who trust us and trust our judgment and believe in what we're doing. They see our vision and they get it. So and people who are experienced in deploying capital in this space. So for example, EIS investors and other clean tech investors as well. So we've been lucky enough to have investors who are starting out on their angel investing journey, for example, and they're joining the fund for personal education and for community. And we've got also more experienced investors who really see this as an opportunity to kind of give back to the community as well. So I think so. In terms of raising money, let's stick with people who love you or who kind of know what they're doing in this space. I think those are going to be the most fruitful areas.
Good. So turning over to other experiences from the early stage market, I would like to ask Cansu Deniz Bayrak from BGV to talk about their portfolio and their investment approach. We started working with BGV from the earlier days of Impact Agora, and again, they've shared deals and direct investment opportunities in the past, and we're working on updating based on their current fundraises. In terms of your experience, Cansu, tell us a bit more about how your portfolio is doing, and maybe also a bit of intro on the areas that you focus on.
Sure. Thank you, Raresh, Ash, Damien, for having me, and thanks everyone for joining on such a beautiful day. A little bit of an intro on BGV. We are UK's leading early stage tech for good investor, and since 2012 we've invested in 127 tech for good businesses. We currently invest across 3 main impact themes, which are a sustainable planet, healthy lives, and better society. And what we do is, in terms of communicating our impact to the wider tech for good and impact community, we map our 73 active portfolio companies across sustainable development goals, and currently we have 15 of these 17 goals covered. And the way we invest is twice a year. We run a flagship tech for good program, and we expect to make 8 to 12 investments every 6 months through that. So that's how our initial investment comes. That we then join our portfolio later stage price rounds as well. And we've just opened the applications for our autumn program, by the way, a little plug, a shameless plug here for anyone who's interested in joining BGV portfolio. And in terms of the areas that we're currently looking at, I believe that we've sort of tidied them a little bit in light of the current COVID crisis. But I think that the main emerging themes are not that different from what we were looking before. So we definitely look at care, accessible care, preventative care, mental health. These are like 3 big areas that we're really interested in. We're really done anywhere, unfortunately. So we look at anything around climate crisis, food security, biodiversity. Air pollution is an area that we are particularly interested in, and worker rights, collective action, and finally, I would say fintech for good. So these areas are definitely of interest for us. Would you like me to sort of like illustrate some of those through portfolio examples?
Yeah, exactly. That's what I was going to ask. Can you bring it to life in terms of some of the businesses, especially ones that are fundraising or have fundraised or have done well, and what we can learn from that?
Yeah, sure. I mean, I guess most of our portfolio who were fundraising were in the lucky position that they managed to close either at the end of 2019 or early 2020. And I appreciate that, that's a privileged position to be in. And we've seen a spike in demand for the ones that work with, for example, NHS or local authorities. I can name Dr. Doctor, which is a platform for scheduling appointments that work with NHS. Hospify, it's a GDPR compliant messaging tool, again used by NHS. Sal, who's currently fundraising, it's a platform for patient management, currently focusing on fertility clinics. On mental health, we have Talk Life, who are based in Bristol and who are doing an amazing job at enabling both peer-to-peer and mental health support. On the worker tech front, we've seen Organized. They've had a massive spike in their users. It doubled in the last couple of months and went up. What they do is they help working conditions by helping workers organize around the issues that they care about. On food security, we have Let Us Grow, another Bristol-based company that I work closely with. They have a patented technology on aeroponics for indoor farming. On air pollution, we have Tranquil City, who are working on an API for to improve your breathing, therefore life quality, I guess, as you live through urban spaces. We have Inhabit, who are working on carbon offsetting in a very interesting new business model. We have Commonplace, which I put somewhere between, I guess, collective action and weirdly biodiversity, because their platform who are helping developers and local authorities to have a conversation as they go through urban development projects. They've also closed their Series A round recently. Yeah, so these are some of the examples from the current portfolio.
That's an amazing list, and it makes me want to really get out of the house and meet entrepreneurs and realize that all this good work is still happening despite the lockdown. So thanks for that optimism and good reminder that some are in a privileged position. And we've intentionally set the focus for today on what has moved and what there's reason to be optimistic about, but I think we also need to recognize that there are people who are struggling, and there are really great business models that have been hit by the liquidity issues in this period. So we can touch more on that in the Q&A, but important to say that not all is rosy, even when we're talking about success stories. So thanks everyone for this kind of initial round of remarks. And in terms of the remaining kind of 20 minutes, we'll go through some of the questions we've received. I'm really happy that we have over 175 people that have signed up for this. So there's a lot of people who can share questions, and we're expecting more. But first, let me start with one from Bertrand to Lisa from Nesta around how you've done the DD during the pandemic, and whether this was something that and whether you knew them before or you were able to learn new things during the lockdown.
So as I said, the investments that we've completed in the last couple of months are companies that we've known for some time. We've known them for several years and tracked earlier investment rounds and got to know them over that time. So we've been fortunate that we have had face-to-face meetings pre-lockdown with all of the companies that we've subsequently gone on to invest in. And for a number of companies that are in our pipeline, we have often met them over time, over months or years. So we have had face-to-face meetings in the past. That's not to say, I think, that we can't work with companies and look at companies where we haven't had that prior face-to-face meeting. There are a couple of companies I'm working with at the moment where we've just missed that opportunity to meet face-to-face, but we're still continuing with our due diligence. And I think you have to just work within the parameters that are set, and we've done a lot of Zoom calls, but we are continuing to do that due diligence.
Yeah. Thanks, Lisa. Another question for Jeremy around the liquidity and the kind of transition beyond this crisis. What can you tell us from your previous experiences in investments and in general as a CIO in terms of the stage that we're at and what you're seeing across your portfolio around, are we actually starting to look beyond just managing liquidity and more into what is worth investing in the future?
It's a really, really big question, I guess. I mean, I suppose one thing that's similar about all crises is when we're in the middle of them, it's not really clear how they're going to play out, and there will be many twists and turns, I think. But yes, you're right. The first few months is always about liquidity. It's around working capital. It's around people increasing their cash runway, and you're definitely seeing that both across our portfolios, but actually across the economy. I mean, the volume of loans that have come out of the banking system now is really pretty incredible, actually, in a short period. There's some stuff about this crisis that's quite different. I mean, there are a number of organizations across our portfolio that are seeing 100% revenue drops. If you're an organization that relies on footfall in some ways, and there are other organizations in our portfolio that are seeing 50% increases. Often if they're more in the tech space, that's pretty unusual to get that degree of split sort of so early on. Yeah, the first stage is always about liquidity, and then the next stage quite quickly becomes about solvency and equity value and investing for the recovery. Across our managers, we're definitely seeing that shift already happening, and people working on proposals that will be important both from the emergence from lockdown, long-term recovery. So for example, one of our managers is working on a housing first investment proposition we may well bring to Impact Agora at some point, which is about finding long-term accommodation for the 5,000 rough sleepers that have been put into emergency hotel accommodation when they come back. It really gives us a one-off opportunity of sort of tackling rough sleeping there. And we think there are a lot of opportunities like that will emerge coming out of this crisis in terms of showing that we've been able to move very quickly as a response. Can we move as quickly in terms of the next stage about how things are recovering? So yeah, I think we are slowly now inching into that stage where people are able to look a little bit, people are gone from at least from looking forward to the next 3 weeks to the next 3 months. And, maybe they're even looking out a bit beyond that on some stuff. So that shift is happening.
So, and on that note, in terms of longer term, there's a great question that came in for you, Jeremy, around affordable housing. Have you continued to invest in affordable housing? And if so, have you had any difficulties with valuations, especially with material uncertainty clauses?
So the simple answer is more money has gone into affordable housing funds, but they have not been making many new investments until the property market reopened. I think it's quite interesting, in terms of institutional investors, that's the area we've seen the most incoming inquiry around. And I think the reason for that is, if you look at what's happened with government bond yields, if you look at what's happened with dividends for large public companies, actually the yield of affordable housing and also a government-backed yield is going to get even more attractive in this environment. So that's the area, whether it's international investors or domestic investors, that we think actually people will be particularly focused on. But we largely, people have not been making new acquisitions through this. It's worth saying most of our investments in that space, but not all of them, are often larger projects rather than necessarily scatter site housing, which would involve some of the processes we just talked about. Got it.
The next question is for Pippa. Can you speak more about the carbon offsetting solutions that you're funding or you're looking at for your pipeline?
Yeah, thanks. Great question. So there are a lot of different options out there. It's worth noting I'm not specifically looking at offsetting, which generally refers to like established technologies like reforestation or clean cook stoves or hydropower in developing countries. We're looking more at like carbon capture and possibly utilization, but definitely storage. So in the UK, there's been a few great examples recently, like Origin out of Oxford, who are looking to create a carbon negative lime cycle, which is particularly impactful because it is hitting that heavy industry side, which is very difficult to decarbonize. And there are a number of different point source carbon capture technologies, such as Sea Capture, who are doing the pilot with Drax on their biomass plant up in Yorkshire. Then there's a number of companies who are developing metal organic frameworks. For example, Mosaic in America, and there's one over in Ireland. I'm blanking on their name, but that's quite exciting in terms of being able to reduce the cost of carbon capture, especially directly from the air, which is significant. The names you normally hear for carbon capture are Climeworks over in Switzerland, who are the kind of leaders for the actual direct air capture. They're one of the recipients of the Stripe money, and Carbon Cure in Canada, who are creating carbon negative concrete being such a huge, I think it's 13% of global emissions, which is kind of amazing that they've managed to make that a much lower carbon process. Stripe also gave their money to Project Vesta, which is using olivine accelerated weathering, which is a very exciting technique that a number of UK companies are looking at as well. And Charm Industrial, who are creating bio oil out of like biomass and then pumping that back into where we took the fossil oil out of in the first place. So kind of full cycle. So lots of exciting stuff going on out there. And please feel free to PM me or email me if you'd like to talk about that in more detail.
Yeah, and in terms of messages, so there are some links that will circulate after the event in terms of links to the websites of the panelists. For example, BGV has several posts on how their portfolio is doing and how they've responded to it. Same, Jeremy Rogers has written a blog post every week for the last 8 weeks, putting kind of CIO view out there for people, and there's more. I'll also reference the companies that Nesta invested in. But if there's anything specific you want us to include in the follow-up, or if you have specific questions, just put it in the chat, in the Q&A, or email us afterwards. We have time for a couple more questions, and I think the best one for now is maybe back to Lisa in terms of this transition to ed tech and health tech. So obviously education and health are areas that are strong in terms of social impact. But so how has this transition to, for example, digital schools and digital classroom, has it been accelerated? Do you think it'll last? And what can we expect once things reopen?
So, yeah, you're absolutely right. There has been a massive acceleration in uptake of ed tech and health tech in particular. In ed tech, what we've seen is a massive uptake in usage, largely driven by the offer from most ed tech companies of free trials or free periods to schools, to parents, and to universities. So, a lot of these companies are struggling with zero revenues, as Jeremy touched on that, for this quarter. But at the same time, they've got exponential spikes in usage. So I think it remains to be seen how that plays out in terms of conversion to paid subscriptions. But in the meantime, what it's doing is, we have had a forced behavior change. And so that adoption is much accelerated for the potential customers for these companies. But it's not a clear-cut picture that this is absolutely a stunning opportunity. It is an opportunity to demonstrate to users the benefits of shifting to digital formats and solutions. But we then need to see those customers start paying for it and valuing that on a longer term basis.
Good. Well, I have to say there is stuff to be optimistic about. I'm just checking my notes here, and there are some resilient organizations that were well prepared for this. There are banks that are lending more than they were previously. There is behavior change that we've accelerated in terms of transition to digital learning. There's a green transition that we may be accelerating. And there's, I think, a lot of businesses that were keen to innovate that have gotten their opportunity to shine. So thanks everyone for shining light on your work, but also giving us reason to hope. And as I said, a reason to get out of the house, or look forward to what we're going to do when we leave the house. As we close, I will quickly just give some updates on Impact Agora and invite Damien from Barclays to fill in on that as well. But from my side, what I wanted to say is that we will be looking to bring someone else to join our team soon. That will be on our website tomorrow, and we'll include the link on our in our follow-up email from the platform, and that could be someone joining either as an advisor to give us advice a couple hours a month on the phone. It could be someone who joins as a fellow or intern, but it could also be someone who is, of course, paid and stays on to help us grow this. We have, every time we run one of these webinars, 20 or 30 people get in touch, and that's a lot to onboard. So we're keen to grow the effort. In terms of, and also one thing on the platform in terms of COVID, we do have a couple of businesses that have a specific COVID-related update or opportunity. One is a medical, a biotech company that has moved into making test kits for COVID. And another one is an herbicide company that makes a product that can actually be used to disinfect public spaces in an organic and safe way. So there are some interesting COVID-related investment opportunities on the market too for those interested. I'll hand over to Damon now to wrap up, and thanks everyone for joining. We will send a follow-up email tomorrow. Our website is up there, and also and thanks for everyone making time on a Thursday afternoon. Damon, over to you.
Thanks, Arash, and really highlighting the core focus of Impact Agora, enabling more capital to flow. That being said, the value of being a member of the community, it comes as much from the connections and the insights from each other. So the panelists, massive thank you for sharing this experience, very clearly just the surface of what they know. Since the launch of Impact Agora last month, the response has been massively encouraging, even in the current circumstances. And it is still early days, and we are looking more for your input and feedback into how we serve you. And I know everybody says this, so let me try to demonstrate this. At the end of the last call, we had a quick survey. We asked you where we should be spending our time. 59% of you said we should host more events, so here we are today and committed to continuing that. 47% of you said we should be bringing on a wider range of deals and funds. So let me highlight some of the new organizations that we have. Not everybody, but a few. Obviously, Nesta joined us today. Earthworm Group is an EIS and SEIS fund manager focused on food, energy, waste. Baytree is an intermediary based in India. Really pleased to have them there. The CEO is somebody who goes back a very long way with us in terms of guiding, and some really interesting opportunities obviously coming out of that market: electric mobility, healthcare, education, etc. Earth Capital, really focused private equity investment fund on climate, energy security, food, water, etc. With a really strong team and experienced team behind them. Telos Impact is a Belgian impact investment and philanthropy advisor, who actually also, I should highlight for them, is looking for an investment director. So if you're looking for a move into Brussels, a lovely town there, you can look for them as well. And lastly, Triodos, really excited to have the corporate finance team of Triodos Bank in the UK join. Now, we've also joined EVPA and supporting some of the impact funds initiatives as well. So really trying to think about how do we continue to broaden and grow out this community at scale and at pace, and hoping that we can do that with all of you. As of a couple weeks ago, 32 members, 15 deals, 255 million of investment opportunity. That number will definitely step up just in the next week. There are a couple people that didn't quite cross the line with us to highlight them today. And certainly by the next time we speak and share with you. So look forward to meeting and speaking to more of you and being able to do that. And also, please take a couple of moments again to answer those questions that are going to appear. It will take you off of Zoom, so just be prepared for that. 6 quick questions about both what you think we should be doing, how you're seeing the market, some interesting insights that we'll post on LinkedIn afterwards, and also that you can share and follow. And then lastly, what else we need to be doing from a marketplace perspective. So hopefully a couple minutes left before you have to jump onto your next Zoom or webinar call. But thank you all again for the time, and hope you and your families are well.